Boss, I want to talk to you about how to pre-qualify for a large personal loan without hurting your FICO score. Don't you go anywhere. You're going to love today's conversation. How are you today? I hope you are doing fantastic. I'm doing marvelous if you had to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka. Now let's roll. In today's conversation, I want to give you step by step all the things you need to know to pre-qualify for a large personal loan without hurting your FICO score. And that this is a very important element, right? Number one, you want to know the basics. It's important. So when we talk about pre-qualifying for a large personal loan, what is that? What does that mean? Well, pre-qualifying for a personal loan means that a lender thinks you are great when it comes to formally applying for a personal loan. In other words, when you pre-qualify for a personal loan, guess what? The bank or a credit union might provide you with loan offers, including an estimated APR, monthly payment, and loan amounts, okay? And does pre-qualifying guarantee a loan? Not really, no. Because being pre-qualified for a personal loan simply lets you see if you are a good candidate for a personal loan without putting in a formal application. So that's the key word here, good candidate. In other words, your profile could be good for us. That's what the lender is telling you, okay? So, however, once you formally apply for a loan, you may no longer qualify due to information that was revealed during the hard credit check, okay? In other words, when they do the soft pull, they might think, oh, okay, this is a great candidate. And when they do the hard pull, they realize, hey, your credit was worse than they thought, okay? So there's no guarantee, okay? And the thing is that you can actually pre-qualify for a personal loan through multiple lenders. And boss, that's what I want you to really think about. It doesn't hurt you to pre-qualify for a loan. So you want to pre-qualify from multiple lenders because since pre-qualification requires only a soft credit check, you can see if you are a good candidate for a personal loan through multiple lenders, okay? If you have more than one personal loan offer, guess what? This is great because then you can choose the loan offer that works best for your financial situation, okay? It's all about having options, okay? And the thing is that you can actually, I just want to say it right off the bat, if you haven't gotten it so far, you can pre-qualify for a personal loan without a hard credit check. Yes, okay? It's just that loan providers, they want to check your eligibility with a soft credit inquiry, okay? And this will not affect your credit score. And how much you will be approved for, again, depends on a few factors. During the pre-qualification process, based on the info you give them, they will their algorithm. It's not a person who tells you that. It's their algorithm tells you, hey, listen, we think you can qualify for 5,000. You can qualify for 10 grand, okay? But during the hard pull process, the actual application process, they might actually increase your loan amount or decrease it, depending on the kind of information that you provide to them. So the first step is you need to know the basics, right? We have a clear understanding of what pre-qualifying for a large personal loan without hurting your FICO score means. Now, you need to get ready. This is important. What I mean by getting ready is you need to know what you need to pre-qualify for a personal loan. So first you got to have you need to know the desired loan amount and loan purpose. Loan purpose is very important. People call it the use of loan proceeds. What do you need the money for, boss? Talk to me about that. Do you need the money for a wedding event, for a wedding, for a vacation, for home improvement, for business purposes? What do you need the cash for? You got to be able to document your use of do you want to buy a car with it? Okay. And you got to think about your monthly net income and asset information. So when we talk about monthly debt income, and I'll talk about that later on, we're speaking about your debt to income ratio indirectly, right? Because we need to make sure that you have enough cash to actually pay for your loans, for your credit cards and whatnot. Okay. We got to think also about your assets. In other words, things like cash, your investments and whatnot. And also make sure that you have your contact information ready, including your home address and phone number. So those are important elements. Where you might also be asked to provide important identifying information, such as your date of birth and the last 4 digits of your social security number. So the whole idea is for the lender to pre-qualify you, to have like just enough information about you to make sure that you are who you say that you are, okay? And so it's important when you think about it. It's important to pre-qualify for a loan because it lets you compare potential APRs across multiple lenders without affecting your credit score. Now, in some cases, such as in the case of PenFed, you can actually compare APRs from the same lender Okay, but you can see the APRs based on the maturity of the loan, based on the loan amount, based on on other factors. Okay, I want you to look right now on the screen. On the screen here, we have the table on the screen compares two $20,000 loans, one with a 10.50% APR and the other with a 15.50% APR. So check it out to see how much the lower APR can save you. This is why it's important to actually to go for a pre-qualification. Just check this out. We're going to leave this on the screen for a few seconds so you can look at the loan amounts. You can see the loan length, the estimated APR, the monthly payments based on our calculations, the amount paid in interest, and the total cost of the loan. You can see that for 10.5% APR, we're looking at $25,700, and for 15.50%, that's $28,000, nearly $29,000. That's a big delta there, right? Big delta. The third thing I want you to do is to check your credit. Okay, this is really important because if you want to pre-qualify for a loan, for a large personal loan, you got to be in a position where you have a high FICO score. Okay, so this is why you want to check your FICO score regularly, and you want to work to improve it if necessary. I'm very serious about checking their credit score because everybody checks their credit, their checks. They check their bank statements to see if they have enough money. They check every quarter or every 6 months or every month their investments, see how the stock market is doing, but they never check their credit. You got to check your credit score. Okay, boss, I want you to implement that today. And I don't care if you're busy, listen, everybody's busy, but you gotta take care of your FICO score. All right. So the thing here is that you want to be in a position where you are monitoring your FICO score constantly. I don't care how you do it. There are a lot of tools out there. You can do it manually. You can actually, if you are currently with a credit card issuer or a lender who gives you free access to your FICO score, that's even better. Capital One does it. PenFed does it. Navy Fed does it. Chase does it. Amex does it. A lot of players do it. Okay. Or if you don't like their services, you can sign up for Credit Karma. Yeah, Credit Karma actually is a great service. You have NerdWallet, you have a bankrate.com, you have a Wallet Hub, you have annualcreditreport.com. It's not a service. It's a website that allows you to check your credit score for free once a year. Okay, annualcreditreport.com. And you can have access to your credit scores from Experian, TransUnion, and Equifax. So the bottom line, what I'm trying to say here is that you want to be in a position where you are able to have a clear idea of what your FICO score is. It's important, okay? And you want to follow a few tips to improve your credit score over time. Number one, you want to pay your bills on time. Really important. You want to reduce your credit utilization. Okay? You want to have the lower the credit utilization, the better. You want to review your credit reports. I mean, for real. Pay attention to your Experian report. Pay attention to your Equifax report. Pay attention to your TransUnion report. We're talking about taking some time to analyze what's in there. Okay, and if your credit is very low or you are starting from scratch, consider opening a secured credit card. Okay, it's all about just getting the ball rolling, right? Being sure that you are in movement. Remember, in and out, in and out, in and out. This is really good. And so remember also that not every lender will be a good fit for you. So search around for lenders that work with borrowers who have similar credit profiles to your own. This is where the whole thing about pre-qualifying for a large loan really is good. Number 4, I want you to calculate something called DTI. Okay, you want to compute your DTI, you want to compute your debt to income ratio. This is important to have a clear idea of where you are at, okay? And honestly, it's not that complicated. People make it too complicated. The funny thing is that, no. People make it too complicated. It's not. When you think about your DTI, just think about two things: your debt payments every month and your income, your gross income, okay? Your debt payments, you can have a list. 5 things or 10 things. I'm not talking about how much you're making, how much you're paying for groceries and whatnot. No, your debts, your credit cards, your loans. Okay, have that in one category, and have your gross income in the other category, and just divide your debt payments into You want to divide your debt payments by your income, your gross income. And that's a fraction actually. So it gives you a percentage, okay? And you want to be in a position where you have a debt to income ratio that is less than 35% or 30%. The lower, the better, okay? Don't you allow your ass to be around 50% or to be around 60%. No, you definitely don't want that. You want to be in a position where you are around 30%, 35%. That's where the sweet spot is, okay? And the cool thing is that if you do that, you are able to put yourself in a position where you can pre-qualify for a large loan without hurting your FICO score, because you are going to be getting a lot of offers, like crazy, like really crazy, okay? So this is fantastic. And the thing here is that you need to make sure that your FICO score actually, your DTI has an impact, because there is a strong correlation between your DTI and FICO score, because your DTI feeds into your CUR, your credit utilization ratio, which in turn accounts for what? 30% of your FICO score. So big decision time, boss. Big decision time. What is your DTI? Do you even have an idea of what your DTI is? Have you calculated this? You need to calculate this. You need to actually sit down, have your calculator, and really compute your DTI. This is important. Do you have a clear idea? If you don't, I want you right after this show to take a piece of paper and just write down your debts, your debt payments, and just to write down your income and just do the calculation based on what I just told you. Very important. Next, I want to talk to you about filling out the form. Okay, so you need to fill out the pre-qualification form, and the thing is, you got to know how to fill it out so that you give the right information. I mean, the right, accurate information. Don't try to rely on a credit card application or loan application. No, we basically want to be truthful here, okay? But you got to know exactly what you actually need to put on the pre-qualification form. So the cool thing is, many lenders let you pre-qualify on their website by filling out an online form, which can include things like your personal information, like your name, date of birth, and social security number, okay? They want to have your contact details, such as your address and phone number, okay? And Edgar, yeah, question? I can't hear you. Speak louder. Oh, the question is, you want to have, what about your employment? Yeah, of course. They will actually ask you to provide details of your employment, including your annual income. This is where it's important, because again, remember, it's a soft pull. So no damage to your heart, to your credit score. There's no hard pull here, but they want to see your income. They want to have an idea of your income. Why? Because they want to estimate your DTI. Remember that based on information on your credit report and based on your income, the lender's algorithm can calculate your DTI, your debt to income ratio. Yeah, because all your debt payments are public information, not public information. They are information. They are information that are in your FICO reports, right? So they might ask you to provide other financial account information, such as whether you have savings, retirement, or investment accounts. So they're trying to see if you have assets, right? It's all about looking at your cash position and see if you will be in a position to repay your loan, to repay your credit card, okay? And so on a pre-qualification form, your lender might ask you your desired loan amounts, the loan purpose, and the repayment term. And those are really important, okay? So the thing is that you will actually undergo a soft credit check. So pre-qualifying for a personal loan should not impact your credit score. So once you submit your pre-qualification form, the lender will do a soft credit check to determine your credit worthiness, which doesn't show up on your credit reports, okay? So as a borrower, you should pre-qualify with multiple lenders to find the best and cheapest loan option. Very important. And if you continue though with the loan application after pre-qualifying, the lender will verify your financial history with a hard credit check, which will appear on your credit report for up to 2 years and temporarily shave a few points off your score. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We're also having a conversation today about how to pre-qualify for a large personal loan without hurting your credit score. And so, next thing you want to do is you want to find out, right? Because you need to find out if you are approved. Because pre-qualifying for a loan is kind of cool, but listen, we're not here to play. We're not here to just to pre-qualify for loans, for one loan after another. We want to qualify. We want to be approved, right? That's the game here. That's the ultimate goal of the game. Okay. So your credit score, which reflects your ability to manage debt, is the most important factor for most personal loan providers. Okay. So for that reason, building a strong credit history should be the best way for you if you want to increase your likelihood of pre-qualifying. We already have that. Now, once you are approved, there are a few things you also need to do. You want to actually pay your bills on time. You want to keep your balances low if you have a revolving line of credit. You want to aim to pay your credit card balances in full each month. You want to pay your loan based on the stated amount you have to pay every month. This is important. Okay, so you need to find out. And the thing here is that in some cases, after the pre-qualification, after you submit the form, it might take a while. It might take a few minutes, or it might take a month. It might take a week, not a month, a week. So that's what it is. I mean, it really depends on whether or not the lender has sufficient information to confirm your identity, your financial history. Let's say they have a clear idea of who you are, how much you're making, where you're living, all that kind of stuff, whether you live in a household with kids or without kids. Okay, those are important elements because they affect your ability to repay your loans, right? And lenders know that. Lenders know that information, so that's why they pay attention to it. Okay, and so it might really take some time, but yeah. But otherwise, once you submit your pre-qualification form, you should see potential loan terms within minutes. Oh yeah, we've seen people who actually got approved for their loan after 3 minutes. After 3 minutes is fine. But so the thing is, if you are happy with the amounts, rate, and repayment term, you are ready to formally apply for a personal loan. So this usually involves uploading financial documents like bank statements and recent tax returns, which the lender uses to verify the information you submitted during pre-qualification. So after you finish the application, the lender will perform a hard credit check, okay? And if approved, some lenders can fund the loan as soon as the next business day. And they will just, the funny thing is that sometimes they can even fund the loan within the day, within 24 hours. And they will deposit the money into a checking account or savings account of your choice, okay? But most lenders can fund within 1 week. The last thing I want you to do when it comes to pre-qualifying for a loan without a hard pull is to just have a backup. You've done everything. You're pre-qualified. They did a soft pull on you, and then you agreed to the loan they proposed to you, and then you realize later on that they actually denied your ass. Okay, those things happen. It's not the end of the world. Don't make a federal case out of it. Okay, that's just what it is. It's what it is. You need to have a backup plan. Okay, so if you're not approved, you need to think about what you have to do to get the cash you deserve and need. Okay, that's the key word, need. So if your application is denied, you should receive an adverse action notice or letter. So this will include information about the credit agency that provided the report, whether it was Equifax, TransUnion, or Experian. Okay, and you will see why you were denied, your current score and factors contributing to it, and how you can get a free copy of your credit report. You can get that through annualcreditreport.com. Okay, and so this information can really be valuable. If you were to ask me, it can be great because it will help you find ways to quickly improve your credit score and increase your odds of getting approved for a personal loan in the future. That's why I'm just telling you, do not make a federal case out of it. This is not a biggie. People get denied all the time, right? The whole thing is you want to ask why you were denied and actually come back. So it's important. So what if you can't get pre-qualified for a personal loan? If you go through the pre-qualification process and you are turned down for a loan, you might not be sure what to do next, right? So first you want to ask the lender what happened. They have to tell you. Reach out to the lender directly for an explanation of why you were turned down. It might still be possible to get approved, or if not, you can use this insight to improve your chances for the next time. And that's what you need anyway. Information is power, folks. Very important. You want to check your credit score and report, right? You can check your FICO score or your Vantage 3.0 credit score for free through a lot of providers. Okay, it's important to know what's in there. You want to explore alternative options to a personal loan. Okay, for example, you might want to think about getting a home equity loan, a home equity line of credit, a credit card balance transfer, or a credit card with a 0% APR promotional period, depending on your situation, and try applying with a cosigner. So if allowed, adding a cosigner to your application could boost your chances of qualifying for a loan, as well as potentially helping you get better rates. Who knows? Thank you so much for your attention. I really appreciate that. In today's conversation, I was just talking to you about how to pre-qualify for a large personal loan without hurting your credit score. And you got to know the basics. You need to get ready. You need to check your credit. You need to compute your DTI score. You need to fill out the form, the pre-qualification form. You need to find out what will happen, the results, and you need to have a backup plan. Thank you so much for your attention. I will see you next time. But until then, remember, stay marvelous.